from a service called Restream, and I can use OBS with that, which is an application, and I think the connection with OBS is better than the connection through the browser. Anyways, technical stuff no one cares about, but I'll test a few things here the next couple days. Well, that long didn't work. Let's see if it holds that level or watch. I mean, it's all about really that level on chart 4, but it doesn't look like it's holding. So really I'm bottom feeding when I should be. I think I'll be proven right here maybe if this level holds. Other than that, I probably should have been shorting at the RDA on chart 2 because we haven't got a clear alpha signal in the other direction yet. All right, I'm not going to let it go against me anymore. Yeah. I need to jump up my positions to 3s instead of deuces. Next level is 146 on the downside. So I'll analyze this. I'm expecting this next push on chart 2 to get up to the RDA. Maybe it won't. Put in trailing stops. One of these times I should test out brackets again. The only reason why I don't use them is because you can't move bracket orders. So if you have a bracket stop, you still have to cancel the order and reset it. There we go. We got to get a little bit of an upside fake out movement. We'll see how well that does. So our next target area is right around 182.75. That's a test of the previous chart 1 level. Sorry, I'm at 182. 182 is coming from chart 1, the previous candle. Looking for a previous candle open test. And that aligns with the RDA. You know, one of the things I mentioned, I'm going to probably keep saying this to everybody understands it because it's one of the cores of what we trade. Understand the correlation between chart 1 and chart 2. Once you understand the correlation between the levels of those two candles and how price action moves, you'll be able to have better entries, better exits, and understand how the market moves a lot better. So for instance, the RDA on chart 2 aligns with a core level on chart 1. So that is, and that happens routinely. So that's 2 reaction zones. You could say the RDA is an artificial reaction zone because it's a calculation based on market data. This is going to be one of those geek points or whatever, high level points that some people won't get, but if you get it, it's kind of like the stars go off in your heads. So the RDA really isn't a true thing that the market uses. It is a calculation. It is a mathematical calculation that we've put together that the market tends to respect. But oftentimes the RDA aligns with levels in the market that the market does trade around. Where, for instance, the previous candle's open is a reaction area. You see it time and time again in the market, just like the current candle's open is. Well, the RDA on chart 2 often aligns with core levels that the market uses. So a level is actually a real price point that the market has created. It's not a derivative of a math calculation. And I know I'm getting deep, but the RDA or any indicator is a derivative of the data of price, open, high, low, and close. Close being the most important. So since the previous and open being next, as far as the hierarchy of value of what the market values as a data point. And when the RDA or other indicators that we use align with those data points that the market uses, that gives us, as the people trading our system, right, the Rexdog system, one more correlation, especially as we see it unfold day after day, time after time, chart after chart, in real time, and we trade with it. So I know I'm making a larger philosophical, not really philosophical, I'm making a larger, deeper point, but understanding the correlation between chart 1 and chart 2 and how they interact and how they change over in correlation with the levels will make you better understand, read, and trade price action. Did that make any sense to anybody here, or am I like speaking Greek? And some of you might speak Greek, so maybe I should say speak some language that we no longer speak. So
Swahili, I think. No.
I agree. Someone just sent me a DM. Please do a video on this. Yeah, I realize that one of the things I'm also considering is, I want to release this executive summary, or I'm releasing this executive summary. There's also going to there's going to be another person that is similar to what Tony was doing, that I'll be introducing to the community. That's a member of my family that is going to take a role. And he's in the process of learning the community and just kind of being a guest here for the next week or so. And then I've taught him some trading. He's already been trading. But one of the things I thought would probably be an interesting thing to do is almost do a start from zero full course. And of course, I'll document this and without duplicating the content, but basically say every 2 days, we're going to do a full course, 0 to elite trader, in however long it's going to take. And so, for instance, it would be as if I was sitting down with you, with the group, and we'd be doing a live course where basically that day we would be covering, for instance, bias, right? And I would teach you the concept of bias, even though that's in the training and it's there. But then those 2 days we would focus on, I'd release the executive summary on bias. I'd have a presentation on bias. And then we would have a Q&A where we would focus on bias. I don't know, because what I'm realizing is that there's just not as much foundational knowledge as I would as I would like to see within even people that I know are doing well trading here in the group, or are real close to maybe transitioning to live capital. Am I explaining that well enough, like the concept? And does that sound interesting?
Hey Rex, Scalpy here, also known as Clouda. Hey, yeah, I think that sounds great. And yesterday you commented on my P&L sheet about level 2. I mean about chart 2, kind of being entries and like finessing your entries based on levels off of C1 and C4, which you were just talking about. And I think that's such a key reminder, and I appreciate you going into that and describing that a couple minutes ago. Something that I get away from and I can get on top of doing, but I know that my entries will be way better if I just follow the system and follow what you're explaining here today.
Yeah, it's too simple, or it seems like it's so simple that you don't follow it. I mean, I don't know if that's your case. I don't know if that's your, but I feel like, well, I will share this directly. There's been 3 or 4 people that I've had to kind of intervene in the last 2 weeks and say, look, dude, like, they've been all guys, because I think we have 2 women in the community that I know of, but where you have too much, I think people see what I have on my charts and what I'm using and think that's the way. But also, I've built up that ability to process that information and to when to filter out what to look at and what not to look at. When you might see that, okay, well, that's the standard. Well, I'm above standard in the charts that I use. Because I just want more information, because at where I'm at, I could scale down drastically and still do just as well as I do. And that's what I'm suggesting for most people, which is get to the bare bone basics of what you need to pull capital from the market. Like you'll see on many of my charts, I have multi-time frame RDA and our momentum indicators. Well, 80% of the time that I pull up that chart, those aren't in play. So they're not relevant. But I do note them, but they don't factor into really my trade decisions, but they're there on the chart. And that, like I said, that goes to because of where I'm at as a trader. If I was just, well, for instance, the person that I'm bringing on, I'm going to be going through a similar process of starting from zero and tracking the journey of his trading. The difference with him is I'm going to demand that he does journaling and we go over his journals. So I intend to record those journals and record kind of the process and everything that goes through it. But you'll see with the setup that he would run, or what we would even go through in kind of this zero to elite trader, everything that I shared on the level 2 isn't in there, right? On TradingView, you have a few more levels and indicators. And then on your trading platform where you execute trades, it needs to be as bare minimum as possible. Because there you're focusing on price action. And you don't really need, here's the thing though. I will say, knowing that the weekly open is in play is important, right? So if you don't have multiple monitors and you can't have, like here, trading view, and I don't know where the daily open is, well, I can't make that assessment without looking on the trading view chart because I don't have it on Tradovate. So what I'm trying to say is, for most people, limiting the amount of indicators and data you're looking at, where you're just focusing on bias and momentum and the power of the 4-chart setup, and trading off bias, momentum, and key levels, and what I call price action levels, which are chart 4. So for instance, a strong level on chart 4 is a price action level. It's a level that's been created by price action. A alpha candle, the middle of the alpha candle, we know is a reaction zone. That's a price action level. So that's what I mean when I say price action levels. Anyways, I know I said a lot, threw a lot your way, or threw a lot towards everybody, but I've been really thinking a lot recently, especially as I see, the more people that would participate, my voice is cracking, more people that would participate in the actual, in sharing their journals, in the alpha journals, and even thoughts in the trade room, the more that I can ensure that I'm covering the challenges that you're facing. If I don't know the challenges that you're facing, then I can't really guide you. And that's why it's been good for me to be on the evening calls, the recap calls, because I'm getting actual feedback from the 4 to 6 people that actually show up there and actually are really focused on analyzing the day and analyzing their trades. And I know it's a little bit more work on your part, but trading's hard. Look, being a successful trader and doing this, you're already against the odds, being a retail trader. So it's hard. So you're going to have to work a little bit harder to see these results.
But you don't usually have levels on your chart, but if someone, let's say, I don't
Oh, you mean me? Do I?
Yeah, I don't. Yeah, but anyone wants to, let's say, in general, it's like on Sierra chart, you can copy your drawings from any chart to any other chart.
You can do that in Tradovate too. Like you can.
I'm not sure. Yeah, but I think it would be a good habit for alphas to initially have levels on their chart.
For levels or. Yeah, no, so in Sierra chart, we have a lot more. So the Sierra chart setup, which I'm going to start using a little bit more here and there, we actually plot like the daily open, the weekly open, more than we plot in Tradovate, right? So, and but we plot the opening range in Tradovate. I think that's what you're alluding to. So, but also, like I said, no, like a multi-time frame RDA, for instance, knowing where the 4-hour RDA is. I have a chart up here in my setup where I'm looking at it. I can see the 4-hour RDA. I can see where it's at. So I wouldn't have that charted on anything, but I see that it's not playing a role. I mean, I see it, so obviously I'm taking it into account, but it's not in play right now. I'm trying to be very clear about what I'm trying to say.
Got it. Thank you.
So for instance, on chart 2, I would only have the RDA, the momentum indicators, the extreme band on our fast momentum, and the RDA with the extreme bands. That's all I would have on chart 2. Because once again, what is chart 2? Chart 2 is our entry chart. So one of the other charts will be your control, or you're taking a trade because we're at a reaction zone, like the opening range mid, or we're approaching right now. Chart 1 is at the fast momentum, is either going to fail here or hold probably right around 192 and then go up and tag the RDA and the slow momentum, which aligns with the next chart 4 level, as well as the opening range low. So if the market's long, or if it's going to stay long, and not break the level that was created at 168 on the low side, where it's going is the RDA slow momentum opening range low. We've got three of our core areas colliding in one. So for now, I'm not looking, even though we are bias and momentum short, you should have already shorted if you were looking at the short trade on the first test of the fast momentum on chart 1. Because that's also the RDA on chart 4, close to it. So you should have already shorted. You missed the short trade, basically. So now you really need to decide, are you going to think long or are you going to think short? I'm opting to remaining having a long bias, which really is a fade in this environment, until I see continued appetite for more downside. I see the market trying to get back up to those upward levels. But once again, understanding when you've missed a trade and not chasing the trade is important. So you missed the short trade on the fast momentum on chart 1 right now. You missed it. So you shouldn't be chasing it now, unless you see that it's going to continue. We've got 1 more minute left in the chart 1 candle. I guess if it has switched momentum. It hasn't switched bias momentum. But if it loses bias and momentum, you could look and say, okay, what's the downside target? And go short. So I'll do a check-in. So someone said that they couldn't participate via, who is that? So I should have went long there at the RDA on the chart 2 test, but I was talking and I didn't want to chase it because it was still a little uncertain by the time that I noticed that I should have went long. I'm still long in 2 lots, so I'm still part of the trade. This is really what I would... Go ahead.
Sorry. I was going to say there was another correlation that I was looking at, which was the C4 M24.
Yeah. And it did just cross over there in momentum there. So, but I think it's going to reach for the opening range. I mean, I'm looking now to sell right around the 280 mark. go short there. But there is a level on chart 4 right around or right at 264. So I am back up to 13K in profit. I blew through 6K being an idiot. Oh, I guess I'm up 34 in open profit. So the difficult nuance of this is basically reading price action and understanding when the indicators and reaction areas that we use are wrong. And that's objectively, it's a chart time experience thing, but it also it is sometimes, look, chart 2 never broke bias or momentum. The momentum did a minor shift over, but if you were just to do a level analysis, it didn't really break core levels there on chart 2. So that minor pullback that it had, it just pulled back to the RDA on chart 2. Now, like I said, you could have very successfully traded the overshoot of the first test of the fast momentum on chart 1, but this goes back to the story of the chart. The price action was showing strength to the upside and follow through on what was that alpha candle that happened on chart 1. So that alpha candle, this action I would consider continued follow through of that alpha candle that we saw in chart 1 that started from the bottom at 9:55, 10:55 market time. And to be frank, that's one of the reasons why it's really, it is hard to trade, because you have to make these. It's one of the reasons why it's difficult to create an algorithm. If you were to say, well, it should be real simple because you just got these indicators. Well, yeah, but you have to make these. The human mind, once trained, is good, can be relatively good at making these decisions. But they're not cut and dry decisions at all times. Sometimes 60 seconds of price action can be the difference between you thinking long or thinking short. And that's hard to put into a system, but it's easy for the human mind trained in a system to recognize that pattern, or to recognize what I would say kind of a risk profile, which is, well, it could go either way here, but it's more likely to go long. A lot of your decisions in trading, not a lot, many of your decisions in trading are because you never really know. But I'd say there are 4 or 5 times a day in our system that we trade where the decision, if you're right on the reaction area and the direction of price, is a 5-minute window, 5 to 7 minute window. And then you're proven right or wrong within that 5 minutes. And then there are points in time where you have decision. And then between that, to enter, to maybe you missed the best entry, well, and then there's a minor pullback. Your decision, your opportunity to enter, and for the chart to then go in your direction without you missing the trade and chasing the trade, is a 60-second window. I know I'm talking these high-level concepts that are hard to visualize, but I mean, I've really broken down a lot of, like I said, trading to really understand this. And I don't know if this helps anybody, but go ahead.
I can definitely say putting it into practice, when we do these nightly recaps, it is getting far more easy for me to see things. It's based on looking at price action again and again and again on different days. And it's like, I don't know, just eventually things start to make sense. So.
Yeah, and it looked like you had a pretty rough day yesterday. Not to bring up bad memories.
No. I'm actually spending my time right now predicting things rather than trading. I'm not actually actively trading at the moment because I want to see if I want to be relaxed without the emotionalism of pushing the button, and placing orders and then having all that come up. And I'm just looking and watching price action and going, okay, am I right? Is this level holding? Okay, am I right? Or am I not right? And so that's what I'm doing right now.
Yep. Makes sense.
But again, it's coming back to just getting familiar with everything that you're talking about, seeing the levels, seeing the reaction zones, seeing where the good entries are,
I think one of the big things is also always doing a gut check. Did I miss the trade? And then if I miss the trade, is there an opportunity to still get into this trade where it makes sense?
I think that's a major
risk
piece.
wise,
Yeah, that's an adjustment that I also need to work on. Is a lot of times I wait for too much confirmation and I've missed the trade. And then, then I get a little bit of, well, I want to make something happen. So I take an unnecessary risk. So, yeah.
I get it. It just looked like yesterday you were chasing. I mean, from what I could see from the results, you were chasing the market way too much. Because usually, like you were up and down, up and down, up and down. So you had some wins, you had some losses, you had some wins, had some losses. I don't know if that's the way it went, but from looking at your P&L, that's what it looked like.
Yeah, well, it started out great. And then when we got into that range, I was thrown. I just was thrown. I did not pause and say, okay, here's a channel. See the high, see the low, and work with it. But that's why I'm here, is to keep working on it, because I see progress. And I had a bad day yesterday, but I'm here looking at things and attempting to learn from yesterday. And I think there's a lot of things. I do agree with you, the journaling, to discover where my areas that I could strengthen are. And I've got quite a few because I'm so new to this. It's like every one of the areas is like, oh yeah, your stop losses, stop choking trades, your FOMO, chasing trades, all that stuff. So I think journaling and also showing up and also just listening. So I'm going to go back to listening, but it's.
Well, it's also, you can't, it very seldom, like if we go back to like exercise, right? If you're lifting weights or most exercises target one area of the body. Now they do, then there's other areas that it will hit. But then, when you get to the point where you need to focus on maybe your bicep or your tricep or specific areas of your body, there's specific exercises that focus more on that. And then you are doing general exercises that hit kind of your core. Well, if you are looking to chisel your body, which is what you're doing with trading, you need to have a strong core. So in exercising, you need to do core exercises every day because you need a strong core. It's just the way it is. Well, that's the foundational stuff of trading. But then, like if you're getting to chiseling your body, and you say I want a bigger, I need to, my biceps aren't big enough. Well, doing leg exercises is going to activate a little bit of bicep somewhere, probably, maybe, but it's not focused. Or, doing kind of even a general arm exercise, your biceps will play a role, but you have to really focus on what is the exercise that activates the bicep and hits the bicep the hardest. And that's why you do have to have a way to measure and track what's the number one thing that's hindering my trading today or this week. And that's what you do exercises on. So,
Yep.
and that in focusing on that number one thing, yeah, you might unlock other things. You might say, well, my entries are crap, right? Well, let's say you do that and then you're like, well, you know what? It's really not my entries. My entries are actually pretty good. It's just I'm putting my stops way too close, right? Because I'm scared of losing money or whatever it is. Well, then you say, okay, well, my entries are actually pretty good because I'm right, but I'm not giving it the full 4 minutes that it needs to unfold that trade. So maybe I do need to work on my entries and do it after confirmation, or maybe I need to have a different way that I look at how long a trade needs to work out, or reducing or making my stops to give a little bit more volatility, because where I tend to enter, there's more volatility. There's a lot of, I do believe the RD scaling ratio that we created, if you want something that is templated, that's a template to start, but it's a wide scaling ratio. So you've got to really, manage your trades. And the thing with the RD scaling ratio is that there's a caveat to that, which is if you scale in at a high probability, so the M9, the fast momentum, is not a high probability entry area. It's just too fast, and it overshoots a lot. The M24, the RDA, a strong level, another key level, like the opening range low correlated to maybe another level or another indicator. The RD scaling ratio works well there. But the caveat to that is what's said with that, which is the market's going to give you one opportunity to break even. So not every trade's going to work out. We know that. But what makes the RD scaling ratio works? It works well. It gives you, if you're a person that needs a finite number, a kind of template number to approach entries and everything else, it works. But you also have to have the wherewithal, the ability to understand when the trade isn't maybe going in your favor, and the market has given you that one opportunity to break even, that you take it. So that's even with a templated approach, because I know what everybody really wants, which is impossible, which is just tell me the stop losses I should use. Like, what's the number? I had someone ask this the other day. What's the amount of stop loss I should have? I'm like, that's so conditional to the trade. It's so conditional to what your control chart is. Are you using chart 4? Are you using chart 1? Like, it's that it's conditional to the trade. So there can't be a template on that. And you notice I don't talk, and I never will talk about a 3-to-1 ratio or anything like that. In the type of day trading that we do, that's not relevant. Looking at your 3-to-1, stop loss to profit ratio, it's not relevant in the type of trading we do. With the swing trades that I do account for at least a 3-to-1 stop loss ratio. But those are more automated for me. But in the day trading that we do, that you see we do on the stream here, it got knocked out finally. So I got to figure out where I want to get back in this trade.
Just speaking to that briefly. I think some of these problems with me or challenges with me, what have you, will fix themselves as I improve my skill set, my core, if you will, using the exercise analogy of being able to understand price action and levels. If I can follow price action and levels, then I'll be less skittish with my stop losses. I'll have more conviction. So, yeah.
No, it makes total sense. Oh, I didn't even check YouTube. I should check, see if there's conversations there. Damn it. Always forgetting that.
Yeah, you've said it only a million times, but you know, it's taken me time to hear predictive. Are you being predictive? And when I'm predictive, I feel relaxed. When I'm reactive, I'm anxious, and it just creates a whole series of other challenges or problems, whatever.
I think that's generally the case because predictive, you feel like you're more in control.
Yeah.
I did short there just for one lot. I thought I did 3, but I forgot I changed my entries. I'm looking for maybe down to 206 again, 205. It's my next level that I'm looking for to potentially go long. Maybe a little bit lower I would allow. Right there at 200, I guess. There's a level in chart 2 that's at 205, so that's probably a good target. Well. It did hit the level almost.
Yeah, this is a prime example of looking at the charts and then seeing that level. That to me is just, you know, so powerful.
Yeah, I'm going long. Just small. It's not a size up opportunity. I do think it's trying to recapture the opening range low. Even if it does that, though, that's going to only be 50% of this day, I believe. Let me see. Yeah. The mid control is right around. Yeah. So the daily is not looking too great, at least on the contract basis. I don't know on the continuous contract. Yeah, it's looking to maybe lose momentum and bias and maybe is set for an RDA check. Right down to here. Maybe we're in for an RDA check on the daily. Major sell-off. I think it probably, before I would make that call, it's got to test today's open. So there is news today, though, isn't there? There's a 2 o'clock FMLC minutes today, right? Or is today Tuesday? Today's Tuesday. Sorry, that's tomorrow. Tomorrow there's CPI, FMLC. So there's, I assume volatility in the morning, jobless claims at pre-market. CPI at pre-market. Petroleum report. And then there's a treasury statement, which shouldn't have an eye impact, but might. FMLC minutes at 2 p.m. So that usually includes something that people in the market look towards as far as guidance to where the financial markets are going or the economy's going. Looks like I'm going to get knocked out. If I get knocked out, I'm just going to wait to a lower entry. This entry is the middle of a range on chart 1, so it's not really a high value entry. Well, it did hold up. Sorry, I'm not showing my, I need to go back to the 5-minute on here and go back to here. Almost there in the test on chart 1. How come my ticky thing is not on this chart? What the hell? That is ticky tools. Ticky. Opening range. It's not 9:30, it's 8:30. I don't know why it didn't show up. Now, approaching the level there in chart 4. The next level is 363. I think that's a little aggressive. That's where it's trying to get to. The long people are trying to get up to 363. That's where they're trying to go. I'm looking for an overextension of the RDA up to like just short of 300. That's well short. So how's anybody else, how they've been trading today? I guess I'd like to get anybody willing to share kind of how they're doing. Other than that big, go ahead.
Oh, I'm sorry.
Nope.
So yesterday, if you remember, I had the major crash and burn day. I lost $14,600.
Yeah.
Today, I am up already $14,344.80. I am
Sweet.
happy.
No, good. I think that's, I'm sure you've probably slowed down your entries.
Absolutely.
I mean, there's, really, if you look at today, there's really only 2 or 3 opportunities here to trade, and then either re-enter that direction. And it was pretty clear. Well, I mean, I think the movement here today has been pretty clear. I mean, we had the major sell-off, which you either missed, and you had 3 times to get into that. And then when the bottom hit, I think it's been pretty obvious that it's been an upward move. But you could have easily over traded these areas, right?
absolutely. It's just about staying technical and with the conviction. And obviously, I did a great job not trading in the channels like we just had.
Yeah.
And all my trades are with the momentum bias and price in the same direction, as much backing as possible, waiting for the most optimized entries, being patient. So it's working beautifully. Just follow the system, be patient. And I know my weak areas, which is channeling. Just to stay away from it saves me tremendous amount of not only money but human pressure.
For sure, you only have so much emotional and mental energy in any given day. And, you know, I mean, you've kind of said it there. The more that you use it up, the harder it is to maintain. And then, you know, you get into this state, I'm sure, where you just can't, you know, it's probably a self-fulfilling state where you're just in this kind of tumbling around, right? And just not making good decision after good decision. So that's good to hear.
And what hurts me most that I know what not to do, and I catch myself doing it.
Yeah.
Usually it's too late by the time I catch it. Then I spend time trading doc, everything. So, oof.
No, I get it completely.
If I can take the emotions out, oh my God, there is no limit.
Yeah, that just takes time. I mean, really, it is. It's like anything else. I mean, it's kind of more. I mean, I guess it's different when you see in the World War II movies where the new recruits come and no one wants to make friends with the new recruits. But you see a big difference between the guys that have survived a couple major battles and their attitude to combat and how they behave and how they react compared to the new recruit that just got there. There really is that difference. You know.
Mhm. So from the standpoint of view, what should happen, what shouldn't happen. So the way I see it is, for instance, right now we have double tops. With almost looks like getting rejected from the RDA. Looking at C1, C1 is my control. Still momentum short by a short, price in the middle between the RDA and F24. So I'm thinking still short would be more preferable entry, but wait until the candle close.
You're talking about now, right now, as we sit, or
Right now.
yeah, I think we're getting close to that. I'm targeting an overshoot of the RDA. So
Uh-huh.
because we haven't had, I mean, every pullback has been answered. There hasn't been a big alpha or a big. You had a little bit of a hope of a short back at 10:35 or 11:35 market time, where it lost the RDA, and but as far as the predictive, I mean, yeah, it's right at the RDA on chart 1. But if you look at, that's where I'm targeting. So just because it might be right on the RDA. And then if I see price action on chart 2 that tells me to go heavy, then I'll go heavy. But right now we haven't got a counter move to the long side to tell you to go heavy yet. Sometimes you just have to do it and trust the fact that there's going to be a reaction there. But it doesn't feel like that point in time on the price action yet. And I think the other thing, you have to be okay with missing the trade. Like I'm okay with missing this short trade here.
Mhm.
But if I wasn't long right here, I probably would have already shorted, I guess is what I'm saying. So that's just how I see the price action right now. I don't know if that answers your direct question or.
Yes. Because every time the price comes towards the RDA, I'm thinking, okay, first touch is the best touch.
Yep.
I remember you saying that.
It is. So that's why I am looking to short, but then I'm also waiting for, one of the other things I say a lot is you expect an overshoot. So that can get you in trouble too, because not all the times is there an overshoot. Sometimes it's an undershoot. So, but I'm expecting an overshoot. So if my entry gets picked up at 829, I probably will add quite a bit there. But I'm risking losing this trade or you're losing this might be the RDA touch here, right? So I might have to chase it a bit because I didn't kind of trade close to the RDA. You know what I'm saying?
Kind of.
Well,
But you're long.
I know, but I'm saying that I really should be looking to go short at the RDA touch.
Uh-huh.
But I'm not, I'm waiting to an overshoot of the RDA.
Mhm.
Or if I wasn't in a trade right now, I would have already been short on that almost touch of the RDA. But I'm not because I'm waiting for the overshoot. So the way I'd be trading this is a little different. So I might be wrong and I might have to hurry up and get and chase the trade down if that was the RDA touch. But then I've got to look and see how much room does the trade have. It is still a bias and momentum trade. So technically I should be looking at the next level on chart 4, which is 18029. But I'm waiting for an overshoot of the RDA on chart 1. That's what I'm waiting for. But I'm not watching the chart enough. If I was watching the chart more closely and not talking and doing other things, I'd be almost prepared to chase the trade on the way down if the chart told me to do that.
Mhm.
These are hard things to talk about not because I'm talking about things that you have to visualize that's not happening. And I can't show you an example of it because I do it when it happens, right? So these are things that if you understand the full system or you understand what we're talking about, this makes sense. But for someone new or I understand sometimes these things are hard to visualize what we're talking about, but it really is simple. But I'm in this instance right now, I'm looking to go short on an overshoot of the RDA on chart 1. That's all I'm waiting for. Or if the chart 2 were to reveal that, hey, no, that was the RDA touch and we're going down, then I would have missed the best opportune entry and I would chase the trade down if it looked like there was room for a downside target, which the downside target right now, the first one is 211. That's what I'm saying.
Gotcha. Yes. And also from the perspective of going with the trade with the momentum and bias. Also, that would kind of add to that theory.
Yeah.
And get more back. Kind of. Okay. Thank you, Rex.
let's see. Yeah, only in one lot. I mean, today's another clear day of, other than me playing around with the bottom a little bit. If I wouldn't have done that, or if I would have traded it correctly, I would be up over 20 grand instead of having to build my way up from 8. But once I got over that little time frame, just trading the system with low lots. I don't think I've gone over 9 lots here today. 16K is not a bad P&L, especially for the amount of position sizing I've done. I just haven't been in the mood to do large positions or activate or trade in a large account the last 2 weeks. There's just been a lot going on. And plus I just haven't been in the mood to want to focus that much on having 50, 60,000, $70,000 days. I'm happy with just these $16,000 to $20,000 days for now. I know it's exciting, or it's good to, you know what, now I have to look and see. I'm going to probably short this. I know it's cool to see the higher numbers and the bigger lot sizes, but I guess not that I don't care. I'm just doing me. We'll see if I'm wrong here. I mean, I'm playing the RDA, shorting that. What time is it? Yeah, we had just the hour cross, so that's also a little bit higher is kind of where chart 3's momentum is. So plus a key level of the previous candle. So we'll see. We're going to have to give it probably about 10 to 15 minutes to develop. So I think this trade, if it's going to sell off, it's going to take 10 to 15 minutes to develop. 7 to 10 to 15 minutes. 7 to 10 to 15 minutes. 7 to 15 minutes to develop.
Just chiming in that the RDA on C1 is essentially a half back on that red candle on C3.
Yeah. Yeah, that's why I probably should have been in the trade already, but its volatility slowed down drastically. So it's going to spike
I
one
shorted-
direction or another. Go ahead.
I shorted at 78.50 a couple, but then I took off an RDA on C2, and now I'm shorting it again. You know, it's funny, when I first started learning the system, it was almost like I was so skeptic about the RDA and how powerful it is, and now it's just day after day seeing what we just saw here on C1 with that RDA touch. It's just like it's just incredible. It's incredible how we can expect a reaction on that.
Yeah. You know, I feel that about the whole kind of system overall, though. I mean, the RDA, but like, it's just because I see it happen day in and day out. I mean, of course, not every trade works, right? But like, there is a reaction almost on every level that we deem a reaction zone. That in itself is powerful because it tells you where to look. It tells you where, you know, where to look for entering a trade or managing a trade, getting in a trade. I mean, it's been years since I've looked at any other system, but I just remember when I was trying to piece together other people's systems and indicators and everything else. Nothing was clear is what I think. I'm not trying to pat myself on the back, but nothing was clear is what I've created or what I've kind of developed. This system that the Rexdog system was created out of utter frustration of trying to figure out how to trade, and every system or indicator system that I bought just didn't work, or only worked sometimes. You know, that's the other frustration. Like, that's also why it does it. Like, it bothers me when people say, "Hey, can I just buy your indicators to your system?" I'm like, it's not the friggin' indicators. Like, it is, don't get me wrong, but it's also the philosophy of thinking about price action and the philosophy of how to read the market. And if I just sold you indicators, you're not going to be successful because it has nothing to do with the indicators are important, but they're simple. And number two, that's discounted because they're simple, but it's the philosophy of how to look at it. And see, that's what's missing for most. Yeah, I'm entering here. So I'm getting aggressive here. We'll see if I'm right. That's what's missing for most of these things, right?
Yeah, I'm getting a little worried about this kind of stair-step bull-flight pattern on C1. I mean, it kind of looks like it's gearing up to make a little bit more of a move higher. Oh, that's just my 2 cents on it.
Yeah, I'm scaling on the short still. So,
yeah.
But once again, I started early like I did. I wasn't as patient for the overshoot, so I'm still expecting the overshoot. I might back off this here a little bit. This might be the opportunity here, but I'm with you because it found buy support.
Yeah. And we're cracking into that opening range low, and then also,
yeah, but
you know, I've got
could be a fake out
profile. I'm looking at volume profile too, and we're going into the value area right now.
Yeah, could be a fake out until it closes above the RDA. We won't know. So, you know, that's the problem with a trade like this. You have to, like, it's literal time. You know, we're going to know in the next, like I said, 7 to 15 minutes.
Mm-hmm.
So you have to sit on the trade and give it enough volatility for it to decide if it's going to directionally go and test the downside level, or is it going to go to the next upside level? It's literally time. I mean, there's nothing else we can do. Like, you know, because it could range in the next 5 minutes and not give us any additional information. But the market's given me an opportunity here to break even, or did. It gave me an opportunity to break even. I didn't take it because I was talking. Guess it's worth waiting for the overshoot. I'm gonna wait for the overshoot like I should have done originally. Is it the day open? It is the day open, so it's probably going for the day open too. Just way more than I want to fucking scale in at. Guess I can. Fine. It's probably going for the day open test. So I'll either stick with this and add on a pullback, change over in momentum, or I'll plan to scale in up to 314.
Yeah, it looks like we're getting rejected off the VWAP and then also the M9 on C3.
Yeah. I mean, I'm short now. I mean, I'm short now. And then like I said, I'm willing to scale in up to that. Probably 820 is probably where I'll cut it. Because then it looks like it might be going to that aligns with levels on chart 3. Daily opens right around there. That is an overshoot of the daily open. I'll definitely take some profit here at the RDA if it hits the RDA on chart 2. Well, I think I'm not going to lose money. So I'm just going to put my stops at my entry. No reason to let the trade go against me here. God, I hate this not ability not to move my friggin' stops. I need to start using Sierra chart. How hard is it to just being able to drag your stops and reset them? Simple feature addition. How
Oh,
hard?
it's like the most maddening thing in Trade-O-Vate. It's just crazy that they don't allow us to do that.
Yeah. I mean, that's almost the number one reason why I would use Sierra chart. Although I hate getting around in the Sierra, I still haven't got the muscle memory to navigate in Sierra chart where I still make the mistake of what buttons to push and stuff. So, but the amount of time that I spend canceling stop losses and re-putting them, like, it's just maddening.
Yeah, I'm about to make the jump over to CR chart just because Trade-O-Vate is driving me nuts, but it'd be nice to see somebody trade it a little bit live with the RDTS before making the jump, just because it seems like a pretty daunting challenge to get up and running on it.
Yeah, I mean, yeah. Like I said, I'm gonna start doing it here a couple times in the streams. Problem is that it's not easy to set. Well, I've got to figure out how I set up so I can stream. I can't trade on the window that I stream on. It doesn't work because it's in a position that is annoying for me to look at. So, and then I can't stream with the window that I would trade on because it's a 4K resolution and you wouldn't be able to see anything. So, you know, there's technical limitations why I'm not doing it. It's not that I don't like the platform and I would not rather trade on it. It's literally is a technical aspect of how many monitors I have in this location. I have 3 monitors here and I don't always like going to my other area. To do these videos. I guess.
It sounds like
Go ahead.
everyone I've talked to who uses it just loves Sierra chart once they get used to it.
Yeah. No, it is great. It is. I mean, once you get used to it, it's muscle memory. I mean, that's literally what it is. It's because they have a specific way that you move through charts, or you have to program. I mean, if you want to be efficient, right? Like there's certain ways that you drag a chart on Trade-O-Vate and even TradingView, right? That you get used to, right? Or resetting a chart, right? By double clicking and then dragging a chart or using shift. Well, so for instance, in Sierra chart, you need to use shift and the scroll bar and it will zoom in a certain way. But then if you don't use shift in the scroll bar, it zooms in a different way, right? So it's just kind of like getting those. I know it sounds very boring and like, but it is muscle memory of using a new tool. But once you get efficient with it, just the ability alone to, once I have my trailing stop set, to just move it is just enough for me to say, it's worth it. Plus it is a little bit uglier. And I do like kind of the cleanness of Trade-O-Vate's charts. I even went, I was testing the indicators on Ninja, and they basically acquired Trade-O-Vate and kind of took Trade-O-Vate's quasi backend and integrated it into the new version of Ninja. But even the way that they've implemented it in their app is different. I don't know if you've used Ninja recently.
No,
Yeah, so
no.
just even moving around the chart there is, like I said, it's frustrating sometimes how little differences on how you do things affect, you know, how you use that app. You know what I mean? Like, plus the charts don't look as modern, I guess is the way to look at it. I don't know. I
Yeah,
do know.
I'm a huge fan of. I come from Thinkorswim, and I love that platform.
Yeah, that's good.
Yeah.
But that
and
even has
I
its
think-
nuances too, right?
What's that?
Thinkorswim has its nuances too on how you use it.
Oh, for sure.
Yeah.
Yeah. It's but it seems more intuitive.
Yeah.
It just feels more intuitive than Tradebait does.
Well, with their change over to Schwab now, what are they doing? Are they going to continue Thinkorswim and then that's going to be Schwab's new platform? Or because I've got the notices. I'm fine as far as all the transfer because I don't go in there that often anymore. Because I mainly do equity trades in there. So they're keeping Thinkorswim, right? The platform.
I mean, that's everything's like painted that way. As far
Okay.
as I understand.
Yeah. You're just going to
I
be
load up
serviced
Thinkorswim.
by Schwab now. You're just going to have Schwab as the letterhead, basically, right?
Yeah, I mean, it was TD Ameritrade before, right?
Yeah.
So, yeah, and so I don't think anyone else could use it. I mean, maybe if you had a brokerage account with, you remember Tasty Trade?
Yeah.
Were they a
They're-
brokerage?
They were a brokerage with. They're still around though, but they're a brokerage, aren't they? Are they
Yeah, I think-
underneath TD Ameritrade?
That's the question.
Oh,
That's the
okay.
question.
They were under TD before, and
No,
oh,
I
okay.
don't know.
Oh, yeah. Well, didn't the guy that always wear a hat on there? Didn't he work at? I mean, they've changed names not many times, but like, didn't he work at TD? Didn't he develop the platform there? I thought he developed. You know,
He was like an options guru, I think.
yeah.
Yeah, that was his thing.
See, I get his stories and the team there mixed up with Theo Trade. I don't know if you're familiar with Theo Trade, but Theo Trade's another guy. I think he was in TD and part of their an employee, part of their ecosystem, but then broke off and did his own thing. And he uses TD's Thinkorswim. Like, I wish that, I wish that I still did this, but I don't really need to anymore. But he has at the end of the week, he has a indicator that tells you the expected move for the S&P, the options for the next week, right? And I found that helpful, where you could get the expected move, on the weekend and kind of know what that expected move was, right? To the upside and the downside.
Are you talking about Peter Resnicek?
Well, he does that too, but
Okay.
maybe I'm mixing him up with Theo Trade, because Theo Trade does the same type of thing. But Peter's part of, what is that other group that Peter's part of?
Shadow Trader. but I
Shadow
don't know if
Trader,
it's
yeah.
still- I don't know if it's still Shadow Trader, if it's a new thing now, because they broke off too.
Oh, they did? Yeah, so maybe I'm mixing Theo Trade with Shadow Trader, but oh yeah, I know, actually, you're right. Shadow Trader is where I don't think I purchased it. I purchased one of their indicators packages, Shadow Traders. It's basically what I use for internals. I simplified what they use for internals, Shadow Trader. So they have an internals. That's kind of where I got the up volume, down volume internals thing, is from Shadow Trader. So they have an indicator that does that. And I thought it was Theo Trade that did the expected move, but maybe it's them too. But I used to every week know the expected move from either Shadow Traders or Theo Trade's indicator and Thinkorswim. And then that was when I was big into also pretty much watching the internals every day, because Shadow Trader, they have a 4 chart setup of internals
Right.
where, you know,
Ball,
yeah.
ball down, ball.
Yep.
right there.
yeah. And I looked at that and I did that for a while. And to me, it made more sense for what I do with the internals, which is combine them and then put the Rexdog, the Rexdog system on top of it, and you get better information. Instead of having to look at 4 internal charts and trying to correlate them. I'm long, so I don't know if you went long too, or you know, you're right that the
Yeah,
sell-off
I've been
wasn't
long
happening.
72, I think was, or no, I started my long around 62. No, I started long at 72.50. I've been in and out a few times.
But I think the daily open, yeah. So the daily open is 315. So that's where I probably consider shorting overshoot of that. And then the weekly open will be in play if the daily open holds, which is what was lost on the sell-off. So then all will be good in the NQ world
There you go.
if it holds a weekly open. I mean, well, tomorrow has the opportunity for a pretty big volatile day. Damn it, I just got knocked out. I gotta have to get back in. Yeah, but as you can
So-
see now, I don't use any of that stuff. Go ahead, what were you saying?
Well, and so I just got out too. I got out at 97, and now I'm just jumped back in at the RDA on C2.
Yeah.
Just wondering if that's like what you think about the getting back in process here.
Yeah, I mean, if it still seems like still looking at long too. I mean, the NQ, the C2 RDA is down at 279, so I don't know if you're looking at MNQ, and the numbers are different. But
Oh, MNQ. Yeah, I'm at
Yeah.
MNQ.
so the NQ's RDA on chart 2 is a little bit lower.
The VWAP is still holding over here.
Yeah,
So yeah, we haven't had a really conclusive close above it. So that's something to consider. It could be a little dumpy. I think we just had the 200 on C1, or we came close to testing it. So I'm not saying the top is in, but I'm going to try to keep close stops, especially since the move's already so protracted.
well, it's pretty rare that it comes this close to the daily open and it doesn't try to at least tap it. So,
Gotcha.
I mean, I'm not saying it doesn't happen. I mean, it does, but it's within 1 ATR in the 5 minute of the last high. So, you know,
Right.
1 ATR of like a 10 ATR is what I'm saying. So that's just me eyeballing it, me eyeballing the true range and not, the true range of the candles. That last high is within the range of the last 7 to 8 candles. So, you know, but in a case like this, I think you have to have a conviction on which direction you're going to play. You know, if you're going to go long, you got to be prepared to scale in lower and stick with it for a little bit until it really shows you that it actually is the sell-off. If you're going to go short, you should have predicted the short already and probably been in it. See what Tesla's doing. I was going to do an idea on Tesla. Wasn't I? Oh, yeah. Well, so far it's doing what I expect. Yeah, for me, Tesla's a very binary thing. It's either going to get to my dollar cost average zone here between 140 and I know it's wide range, in 80 and stay in that value channel till 2028, or it's going to $900.
Hmm.
So I'm looking to build a position in Tesla on the next pullback, if it does pull back down here. Otherwise, I might, well, that's what I'm going to share in the idea. If it does change over momentum and bias, I might just start buying there. Because to me, it's a very binary. I don't look at Tesla as a rational market. Meaning that it's never made sense from the numbers, right? Of Tesla, like the numbers of, if you were, if you're a fundamental investor, it's never made sense from a fundamental side. So I've never treated Tesla as, I treat it like a meme coin, because the buyers of it and the narrative around the purchase and potential of it, to me, is the same thinking as the people that buy meme stuff, and then what drives the crazy price action on some cryptos. So I've traded throughout my time as being a trader, I've traded Tesla accordingly and done pretty well. Or something like Boeing, for instance, has more of a rational buyer base, is what I would say. So
there's less alt.
Yeah, and there is more consideration on, the standard fundamental things that fundamental buyers look for, right? So, I mean, I look at the nature of Tesla. Just as long as Elon Musk is in charge of it, and calling the shots, it's always going to be a speculative nightmare, because you don't know which one of his ideas within the Tesla brand is actually real, or is actually like has true market space, right? I mean, he's proven the car a little bit, but his robotics side, you have no idea. The other stuff like self-driving cars and self-driving taxis. I mean, that's starting to pop up in some cities, like in Arizona and places like that, but Tesla's not that present there. But they also have the data set more than any other car world in the world. So, it's just I'm talking more fundamental here, but it's just, measuring Tesla as far as what's real and what's not. Comparatively to, I mean, there's Tesla bros and people that like just believe in the company, that put their capital to work, right? So even, what's the chick, that Kathy chick that seems to always get them, you know what I'm talking about, the hedge fund lady.
Mhm.
She,
Nope.
she seems to
No.
think Tesla's going to get to 2000. I think I read the other day. Is that right?
I feel like the shine is wearing off on Tesla. I think the reputation of like the poor make quality,
Yeah.
and the other competitors in the field. I mean,
Well, the Cybertruck, I don't know. I mean, it is, I still haven't, I haven't seen one in real life, but I mean, it's more of a kind of cool to see, but it doesn't seem like a real
Katie Wood.
foray.
Katie Wood, I think, Rex.
Yeah.
Who was saying that. Are you talking about ARC?
Yeah, that's her. Yeah. Boy, I wish I had her job of being wrong all the time and then also being able to get capital. Wish I could have that job. Yeah. So did she? I don't know if that was real or not. I mean, if I don't read the story or at least see the source and dig a little deeper, I try not to believe headlines. But I thought I saw that headline on one of the financial news sites, with her prediction. Because it already split, right? I'm not split, but it already, yeah, split. I mean, looking at the chart, the percentages are the same, but they split it down to now it's, I think, it's in the, wasn't it one time it was trading in the 800s or something before it split, right?
I think it was.
Yeah.
So here's a question about what's going on the charts. We've got kind of a double top on C2. We're at the top ATR band on C4, and then we're hitting the M24 on C3 and the 200 on C1. And then we're also kind of squished between the 200 and the VWAP on C1, and that's kind of, I don't know. I mean, is this where
You're complicating it too much. Really, the big boys, what are they looking at? Like, I mean, those matter what you're saying, but all they care about is the daily open gonna hold. That's all that you know, if I'm a large trading desk, I see the daily open there, and all I care about is the daily open gonna hold as far as the value, the fair value, what the market thinks. That's the target. Let's see what the daily open's gonna have. Daily open holds, okay. You know, if our other parameters and the other indicators that we look at, proprietary indicators, whatever indicators show, well, we're going to jump on board with the daily open holding. Or if the daily open fails, well, we're going to hit it big and we're going to take our big thumb and we're going to hit the sell button. I mean, I got a little insight that it works a little bit that way, but I really don't know. But that's the way I look at it. Because you see it time and time again. Like, what is the mark? What is the, like, always trying to figure out what the level is that is being a magnet for the market, and then ignoring the volatility in between. What I mean by that is the daily open is the target. These little movements in this little range here, you can lose a lot of money, right? But if it gets there in the next half hour, which is a lot of time when you're sitting there watching the chart like we are, a lot of mental energy. At the end of the day, the volatility between it getting to the daily open and holding the daily open is meaningless if it holds the daily open, because that's the daily open for the day. And then that would put the weekly open in target, right? Does that, am I being clear? I'm not trying to oversimplify it and also discount what you're saying, but it's, you know, how you do trade with some more conviction is that you try to boil it down to what is the ultimate target of the market, right?
Yep.
Does that answer your question? I mean, or does that kind of answer what you were saying?
No, I think it's great. I think it's great. I think that there's an issue that I run into that is, you know, I try to make, you know, I put on a lot of trades. I put on a lot of trades throughout the day, and you know, and waiting for, you know, putting on a long position and then watch it, you know, watch myself make $800 on it, and then it comes back down to $300. It gets me a little twitchy.
Yeah.
You know, and doing that time and time again, you know, I think to myself, well, why do I, you know, get out higher and then, you know, and then get back lower. And so that's typically like the strategy or the style of trading that I'm developing is a little bit more active.
Yeah. And you see, I'm slowing down on doing that, mainly because I'm streaming and I'm talking. And the problem that I would run in, even though I'd make more money, I'd frustrate me because I get distracted and I can't watch the chart to trade that style. And I would then not maximize profit or have losing trades. And then I'd have to like trade aggressively to where when I'm streaming now, you see, I'm not really sizing up a lot. Cause I'm getting distracted with, not distracted. I am distracted from the price action of the chart with questions. And plus I've also kind of slowed down in me being aggressive. Some days I feel like I want to trade that style, but also I'm starting to kind of lean more into, my trades are 10 to 20 minutes long, and I'm not really re-entering unless the volatility. I'm really trying to within the 4 chart setup in the system, see what's the target, and let me trade to that, right? And so, but the style you outlined, I think, can be very successful. You do have to adopt exactly what you said. You need to maximize profit when you're in those highs, and then not lose on trades, and then start over, right? And you can make, I mean, you can do very, I mean, you make a lot of, I mean, that's some of the best days I've had with the streams are me trading that style, right? So, but that doesn't allow for me to have conversations or for me to do anything else except for focus on the chart. But today's a prime day where, like, once we've identified that the daily open was kind of the target it's going after, well, the mantra really has been just buy every pullback. And the overshoot of the RDA with the sell-off continuing didn't materialize. Now, we did get a little clue there where momentum did change over at 12:20 market time. So momentum on chart 1 changed over. So on that overshoot, the momentum had switched, and then the bias momentum was still short. So we did get a little bit of a clue as far as momentum-wise that, hey, maybe it does have more upside, you know, because the momentum's starting to shift. I think the thing to watch now is obviously the daily open, but then it's right near kind of the 75% of the previous candle, and the RDA on chart 3 is right there. I'm talking chart 3. So, you know, this could be a real simple sell-off to, well, 3 candle up to the RDA of chart 2, and then a rollover and sell-off. It could be that type of day. So meaning that this candle closes on chart 3. If it closes at the RDA and the daily open, well, then I'd be looking at the open of the previous candle or the alpha candle as the target. But then I'd be saying, well, why wouldn't it just hit the level above that was created at, what is that? 385 or 368, right? So
Also,
right, you're on it.
weekly open at 350.
yeah, I think probably that the best opportunity for to sell at this point is probably an overshoot of the opening range mid, right around that 360 to 350, which is the weekly open. And if it's going to roll over and sell off, that's where they're going to hit it. The market's going to hit it. The algorithm, or whatever you want to call it's going to hit it. So far, that's what the day's lining up for, right? At this point in time. Like, that could change if we get an alpha candle and it closes below the RDA on chart 1 and loses momentum. Well, then we've got a different story, right? So if this current candle here or the next candle on chart 1 takes out the RDA, takes out the momentum indicators, well, then we have something to trade against on the downside, right? Then it's like, okay, well, maybe it's going to roll over. Short of that, we've got to be looking at the upside levels and areas to say, where is it going to stop and where is it most likely going to roll over? This is the type of day too where maybe, you know, not to, you don't need to, but if you wanted to look at the internals, you might be able to get a little bit of information from the internals, because what you might see there is on the underlying, are they looking at this as an opportunity for value, buying value, right? The pullback happened. See, Bitcoin is kind of lost. So it's interesting that Bitcoin pulled back, but that's its own thing. So if we do go to the underlying chart, where is that at?
This feels toppy right now.
Yeah. Well, we have for a reverse sign of a possible sell-off here,
Yeah.
right here. What the hell? Where's my underline? I did short that move. We'll see if the RDA breaks, then it could roll over here. Exactly kind of what I just said is maybe unfolding as we see, as we are watching. You've got a level on chart 4, which is at 278. And then your next level on chart 4 is 257 on the downside.
It's hard to short for me right now.
Yeah, I think we'll see. I'm shorting. I could be wrong. Might be just a momentum and bias check. I will be taking a look at taking profits quicker if it does sell off here, though. So I don't have full confidence that it will sell off. Not find a level. All right, I'll trail my stops. No reason to lose any money here. It's either going to sell off right here or not. I don't have a great entry, so
Yeah, it's starting to feel like it's going to whoosh down, doesn't it?
yeah, I don't know. Like I said, I'm out.
You're out.
I mean, I'll still probably short here, but my entry wasn't that great. So I'll get picked up and still call the bluff on the rise up. Plus, I don't really have the energy to actually trade this heavy. I don't have the patience right now to actually want to trade this. I mean, I need a break. That's what I'm trying to say. Here's where I want to make some profit right there. I'm back in short.
Yeah, I started from 288. Not great at position, but I think I'll add up to the VWAP maybe.
I don't know. Chart 2 is just holding the RDA every time it's checking it. So it just needs to break it one time and it might continue going. But I'm sick of it holding it. It's because I'm not, if I was trying to be short, I would have had a much better entry above. But I've been, there we go. All right, well, made some profit. Still have 4 lots in with $600 open. Let's see if I can stick with that on the next downside, which might be, I mean, the next downside target could be 278, or it could go as far as 257. Might stall right there, right around the opening range low if it gets there. But like I said, though, this is all noise as far as getting to the daily open. Like it really, I mean, it is a pullback, but it's a pullback within a range. I mean, to me, where it doesn't become noise is below 255. So, like, these are moves that you can make money on, but as far as like the structure and I wish I would have had a little bit more on this and whether or not the daily open's still in play, it's noise from here to 255. Yeah, it would have been nice if I would have had more on the line there than just what I had. I was right. I should have stuck with it. Oh, well.
Yeah, I had 3 micros. From 87. Just took one off though at the opening range low. We got trailings on the last 2.
Man, oh man, oh man. There we go. Well, well, well. So like I said, this might change the narrative, but I'm going to reverse. I'm going to go long here with just a couple contracts with the expectation that that level is going to hold. Well, this is the other thing where you look at the pattern that's developing too. And you look at chart 1, you could say, well, at the end of the day, will that look like just an overshoot of price action on the RDA and then it continued downward? So you got to be open to seeing, visualizing what the day might unfold as. Let's see if I'm long, but my position isn't as good as it should be. Really, what happens up here at 271, if it gets up there, is key. Or should I just continue to the downside?
Yeah, I'm trying to figure out if I want to add at the M24 on C2 or if I want to add at the RDA on B2 to the short.
I'm just trying to, ultimately, I think there's another, possibly either it's going to stop here or there is another leg down. So if it stops here, this will be a pretty good entry for the start of a daily open target above, or if it's going to sell off, it's going to at least come up, I think, to that 271 area, which is hitting right now.
Yeah. I'm going to add to my short.
I don't know, all my stops and everything's in profit, so. Oh, that's not bad. I'll make another extra $500 or so. Oh, there we go. All right, well, if I take another trade, that means I probably need to sit here for a little bit. And I don't really want to do that right now. So I need a break. So I'm going to take a break, guys.
Well, thanks, Rex.
Yeah, who's
Awesome.
if someone else streams or
Thank you very much.
yeah, if someone else streams or gets on here, trade the system, focus on the system. It really feels like it's probably going to sell off. I should have shorted that. All right, I got to stop looking at the charts. I actually do need a break. So yeah, I'll try to jump on here in the afternoon. If not, I should be able to make the evening session here tonight. So we'll see everybody in a little bit. See ya.